So we'll just go ahead and get started. Thank you for sticking around. This is just the continuation of a wonderful day that we had yesterday and a great morning. My name is Lana Sen, and I'm with CGF Bourse, which is an investment advisory firm based in Senegal. And it's a pleasure to be here to moderate this great panel. I think we spent the last day and a half talking about investment opportunities in Africa. We've talked about it from a macro level. We've talked about it from a political environment standpoint, from many different angles. And this panel is really to give you all an opportunity to look at specific companies and institutions that are on the ground and that present investment opportunities to all of you and to investors around the world. So without further ado, we'll just get started with Mr. Schoeman, right? Please forgive my pronunciation. Schoeman, right?
100%.
Excellent. So why don't we go ahead and start with you, and if you can tell us a little bit about DRD Gold, and also what you see as investment opportunities within your sector in the next few years.
Yeah, 100%. Thank you. As our name suggests, we're a gold producing company in South Africa. I'm just going to give you a quick rundown of the company itself and then go into the investment case. We're a surface operation, so very much different to any other gold operation where you've got underground and open cast operations. We only on surface. We retreat tailings facilities, both sand and slime, and from that we then produce approximately 400 kilograms of gold. We're a big operation, moving approximately 2.2 million tons of ore per month, producing 400 kilograms of gold. We've got a turnover of approximately 160 million per annum dollars. With a market cap currently of $60 million. We listed on the JSE as well as the New York Stock Exchange. We produce free cash flows of approximately 12 million per annum dollars, and this year will be our 8th consecutive dividend payment year. I think what makes us also very different to other mining operations is the risk profile, as I've mentioned to you previously. We've got a stable workforce which consists of approximately 940 skilled laborers, and we've got a different set of laborers than what you would have with an underground mining operation where you have formal rock drill operators. We don't have that. Our guys are trained to operate and essentially sit in front of a TV panel and operate by opening and closing valves. The gold price is under pressure, as we all know, but I think what's also different in our case is we've got to look at the rand per kilogram gold price and not necessarily the dollar per ounce. All our costs are in rand, and from a cost perspective and a gold price perspective, this is the highest rand per kilogram gold price we've had in a very, very long time. It's over $510,000 per kilogram this morning. So if you're looking at it from a cost and a metal price production perspective, this is also a very attractive opportunity. Then just from expansion, we've got some significant projects coming up. We currently have a 10-year life of mine with existing infrastructure. That life of mine is limited currently by the tailings deposition facility, our own tailings deposition facility. We intend expanding that facility as soon as that is authorized. We can then have a life of mine between 20 and 25 years going forward. And then we're actively looking at expanding our operational model in South Africa itself, but also the rest of Africa.
Excellent. Thank you so much, Mr. Schoeman. And also to clarify, Mr. Schoeman is the Chief Operating Officer of the company, not the CFO. But thank you very much. Why don't we just go straight to Mr. Morin, who represents and actually we talked about an example of a company. Now we're also going to talk about companies that accompany investors who are interested in investing on the continent. So you're representing the government finance institution. So why don't you just give us a little background?
Okay, thank you. Thank you very much. Thank you a lot for inviting Cofides to this summit. As Cofides CEO, I would like to take this opportunity to present the main activities of the company. And at the same time, I would like to invite you to work with us. Cofides is a leading European financial development institution with more than 26 years of experience in providing financial assistance to a Spanish company all over the world. Cofides is a public and private company. Our partners are public stake, mainly Ministry of Economy and Competitiveness in Spain. They have 53% of share in this moment. Private state, they are all in important global banks, BBVA, Banco Santander, Popular Bank, Southern Bank, and Development Bank of Latin America. Two major drivers are part of our identity. Number one, facilitate the internationalization of the Spanish corporation with partners of other foreign countries. Number two is very important for us, contributing to the development of the recipient country of our investment. Let me now describe briefly how Cofides works. We mobilize our own financial resources and also manage third-party funds, including domestic state-owned funds as well as sovereign wealth funds from foreign governments. Cofides manage the state trust funds. The Spanish name is FIES and FONPYME. This fund to promote the internationalization of the Spanish private sector. More or less, they are like small sovereign fund for internationalization only. In this context, I think that's important to speak about two funds or facilities more where Cofides is an important partner. As a European Development Finance Institution member, Cofides is partner or share two specific funds with a capacity for investments only in developing countries, around 700 million euros. They are European financing partners and inter climate change facilities. Additionally, we have other collaborations, agreement with sovereign funds. For example, recently we have an important agreement with Oman. In total, and at the moment, we have a financing capacity of over 2.5 billion euros. Well, in other side, our portfolio have a good diversification by countries, by sector. From our creation, Cofides has approved a total of 750 investment projects about infrastructure, energy, transportation, agro-food service in nearly 80 different countries. And by products, we have a good diversification too. For example, in 2014, Cofides operations were ranking among the top private Spanish equity and venture capital investments. In this context, the question will be why Africa and why Cofides? I think it's for many reasons, including, of course, historical ties and geographical proximity. With around in this moment, 162 projects in Africa, Cofides has contributed to an overall portfolio of around 7.7 billion euros. For example, inside this project, one of our major initiatives in Africa was the Bakwena Platinum Corridor. It is a highway infrastructure in South Africa that was funded by us in 2001. This project has had a very beneficial impact of development, job creations, and revenue for local small and medium enterprises. Like the final remarks, I would like to say we have a private ownership with independent management based on market and profitable criteria. Africa, this important, is one of our region of interest in this moment, with a special focus in infrastructure and energy projects. We have experience in this sector, in this area, and we have a highly interesting co-investment agreement with other banks or similar companies to provide financing support for Spanish firms that they have a joint venture or similar with African company for business and projects in Africa. Thank you very much for your attention.
Thank you very much, Mr. Marin. So just to maybe find a similar model, this is kind of like the OPIC that we have more or less in Senegal, in the US. So you accompany Spanish firms with other potential partners who are looking to invest in projects in Africa and other parts of the world.
All right.
Excellent.
Yes.
Great. Thank you so much. Thank you. So now, Mr. Otieno, you are CEO of ATI. You can tell us a little bit about ATI and how you can accompany investors interested in Africa.
Thank you, Chair. I'd like to start by thanking the African Investor for inviting us here to tell you about what we do.
Sit down.
ATI is African Trade Insurance in full, is a multilateral organization owned by African governments, set up in 2001 to support financial and technical support of the World Bank. But now African Development Bank is deeply involved as well. We are in about 10 countries as at yesterday, but we've got 3 more countries yesterday. That's Ivory Coast and Ethiopia and Benin through the funding of African Development Bank. We are mainly political risk insurers and trade credit. We give investors comfort, investors coming to Africa, that they can do business and will take care of their risks. We currently work with lenders, we work with exporters, we work with SMEs, we work with governments, we do sovereign guarantees as well, and also we manufacturers. We do what MIGA does. You're all familiar with MIGA, but we are more or less African MIGA. We currently see a lot of investments in energy and infrastructure, particularly renewable energy, where we actually at the moment working with the EAB, European Investment Bank, to provide guarantees for renewable energy in Africa. On the infrastructure side, we see a lot on hard infrastructure, railways, and all that. But communication, I think we've seen quite a lot of telecommunication, but of course that's a bit flat at the moment. Agriculture is also an area where we are now quite involved, and I think we are working with USAID in Malawi, to establish a commodity exchange where farmers could discount their products. We are rated by S&P. We are the highest rated financial institution in Africa after ADB. We have an A rating, which is stable. We believe that we could provide comfort for investors that are coming to Africa. So if you have any other questions, I'm sure I'll be able to answer.
Excellent. Thank you so much. That's very helpful. I think a lot of investors a lot of them bring up always the question, how do I protect my investment, against political risk, against all the other risks that we see. And a lot of times people think of MIGA, right, the World Bank arm that provides insurance, but here's an example of a local MIGA that's based on the ground, that understands the realities on the ground, that can accompany investors in protecting their assets. And so let's move on now to the financial sector. Let's talk about FNB Capital. Mr. Okeo?
That's FBN Capital.
Yes, FBN.
We'll run into that a lot, but please don't confuse us with the South Africans. Yes, First Bank, the FBN Capital is actually part of the First Bank group. First Bank is the oldest and the largest bank in Nigeria. It's been around for over 121 years. We are the investment banking and asset management arm of the group, focusing primarily on raising funds for emerging opportunities in Nigeria. In the last 3 years, in 2013, we were the leading fund arranger for the power sector privatization. In the course of that privatization, over $2 billion was raised for the assets, and we were responsible for close to $1 billion of that. Last year was, we had a number of divestments by the international oil companies of oil assets in Nigeria. Total sale was in excess of $4 billion. We raised over $2.5 billion. And this year alone, we've raised over $1.5 billion for various projects in the country, ranging from gas pipelines to other energy and oil and gas related transactions. The more interesting thing about this, our fundraising, is that over 80% of it was from local institutions and investors. And we feel strongly that our ability to persuade offshore investors to invest in Nigeria and even across the West African sub-region can only be predicated on being able to convince ourselves to invest. It's been a credit to the development of the African markets, particularly Nigeria, that 10, 15 years ago, it was impossible to get the financial resources in Nigeria, for instance, to raise anything up to $500 million. Indeed, I recall when I returned back to Nigeria in 2001, the LNG project that was embarked upon by both the federal government and a number of oil companies were trying to raise about $1.1 billion. It was a struggle to get Nigerian banks to contribute $100 million. And yet, in 2014, Nigerian banks practically raised over $3.5 billion for these oil and gas assets. We feel that being able to channel those sort of liquidity, those sort of resources to key sectors of the economy, particularly energy, natural resources, is critical to developing the fundamentals of the economy in the country. We know and we accept, we realize that African economies, Nigeria in particular, are going through some difficult challenges. But we think that there are still significant opportunities for investment. There are significant opportunities for co-investors to join us in investing in key areas of the economy. In particular, my team is very focused on infrastructure. At the moment, we are advising the Central Bank of Nigeria, as well as the electricity regulator, the NERC in Nigeria, on creating the economic platform to ensure that the power sector reform can actually move on to the next level, which is basically to declare the transitional electricity market, which will involve, more than anything else, implementing the cost-reflective tariff. This, of course, is something that we should have done last year, but we've run into a bit of headwind from lack of political will just before election to raise tariff, which is understandable. But I think the new administration has shown significant commitment to achieving that, and we expect that within the next few weeks, we are going to implement the cost-reflective tariff. We have also focused on investment, particularly in key parts of the power sector value chain, particularly gas to power. We've been supporting a number of investors and firms in that area. We just closed a transaction for AccuGas, which is one of the biggest pipeline operators, and is trying to expand the pipeline of about $700 million. And in this particular case, it was gratifying that we were able to bring in significant offshore investment despite the fear of devaluation and the challenges being faced by the economy. Close to half of the money was actually raised from offshore. And one of the things we were also able to do was to provide credit insurance in the London insurance market for this for the transaction. We feel that the number of areas which remains attractive for investment. I've mentioned power, natural resources, particularly oil and mining, at least in Nigeria, remains an attractive area. We are seeing a number of divestments from onshore assets by the IOCs in Nigeria. This has been very successfully concluded in the past, and we expect to see more of that. The indigenous firms are much better at managing community relationships. They understand the local feelings. They're able to bring the community on board. They have significant stake in the economy, and therefore their practices, while adhering to global standards, are also tailored to ensure that they are fully compliant, and they're able to carry along the government, the public sector, the communities, and also ensuring that they operate as safely and as securely as possible. We've been working with a number of them. There was some mentioning of Seplat that had an IPO last year. We've gone beyond that to even raise over $1 billion for Seplat earlier this year, and a number of other companies that we've been working with. But beyond that area, we've also been very active in other key sectors. I mean, in the past, we were very active in promoting the telecom sector. We were one of the biggest investors in what is now Airtel, what used to be Equinet Nigeria. And a few years back, about 5 years ago, we got together with some investors and other financial institutions and set up a company that has become the leading cable operator in the company. That's Main One Cable Company, which has been a fantastic success story. These are areas that we feel that are critical to developing the fundamentals of the economy on which we can build a solid growth economy. Without the likes of Main One, it's almost impossible to envision the boom we've seen in e-commerce retail sector in Nigeria with the likes of Jumia, Konga, and a whole host of e-commerce-based businesses. Indeed, one of the interesting developments that we've noticed in the last 1 year is the move of major corporates to manage services, to moving their IT infrastructure, to actually moving away from IT infrastructure and moving to co-location, managed services, and this we believe can only happen with greater investment in infrastructure. And this is one of the areas that we are very, very focused on, and where we actually are looking and are constantly looking for partners to join us in investing in Nigeria. What's the investment case? I will be repeating things that you probably heard yesterday and today, and which you're pretty familiar with. The demand is there. We look at the power sector. Some of the numbers we were looking at last year show that total revenue from the grid-based part of the power sector is about $1.5 billion in Nigeria. In the next 10 years, that number is going to go up by 20-fold because the market has the capacity, right, for $20 billion in revenue. And that's a fact, right. And it was interesting. I was discussing with a gentleman sitting beside me yesterday. When you look at something like power, it's almost like a fundamental need. People will sacrifice other consumption just to have the minimum level of power supply they need. So right. For us, this is just critical. This Absolutely. Is an area that we.
And I think that's actually a very important point, and I'm sure it probably will come up during the Q&A yes. part as well. So thank you very much, Mr. Okeo. So let's move on to the next big bank in Africa, EcoBank. Thank you, Mr. Einhart to tell us a little bit about the success story of EcoBank and the opportunities that you see in the coming future.
Thank you, Lena. I would like to start by thanking as well Africa Investor for inviting us to this event. What is EcoBank? EcoBank is the Africa's largest bank when considering the footprint. We are present in 36 countries, and we do focus only on what we call Middle Africa. And we like to say that Middle Africa is basically the meat in the sandwich in Africa, because we believe that Africa is segregated in 3 different regions: North Africa, Sub-Saharan Africa, and then South Africa. So we focus only on that center, which is Middle Africa, where you are seeing the largest growth today in the continent. EcoBank is the only company listed on 3 stock exchanges in West Africa, i.e. in Nigeria, Cote d'Ivoire, and in Ghana. We have a balance sheet of over $20 billion US. Revenue base are close to $2.5 billion US. We do provide to the investors on a constant basis PBT close to $500 million US. Our 6-month PBT in 2015 was at $322 million US, up 22% against last year. Cost income ratio is close to 62% today. We still have some work to do there. And our target is to bring that cost income ratio close to the high 50s in the coming years. And the purpose clearly is to deliver return on equity around 25% to our investors. As of today, our return on equity is close to 18%. Why investing in EcoBank? We believe that investors should consider EcoBank for 3 main reasons, if I may say. The first one is that EcoBank is a pure play if someone believes into the transformation of the continent. We focus only on what we call Middle Africa, to repeat myself again. So if you want to play Africa and focus on where the growth is, EcoBank is certainly a pure play to consider. The second reason why investors should consider EcoBank is the diversification play. We are present in 36 countries, so we have that balanced portfolio if you look at it from a portfolio manager perspective, where you know that if anything goes wrong in a specific country, you can still get some return on another country. And I want to highlight that case because it is very fundamental. What we have seen in the last 25 years in banking in Africa is that volatility that you can see in some market at some point. And it's always important to have that balanced portfolio to make sure that you can deliver a constant and a stable alpha to the investors. The third point, advocating for investing in Africa is indeed EcoBank is a return play. We do deliver today a return on equity of 18%. We strongly believe that we're going to reach the 25%, which is our guidance, which is going to make us one of the best performing banking in the financial sector in Africa. One has to know indeed that the engine of the growth in the continent today is indeed the banking sector. So playing the largest bank with a stable return is indeed a good choice when considering EcoBank. What is the way forward? We believe in 2 stories. We have a clear vision about where we see the continent in the future. The first one is that we believe that there's a need for further integration. We do support strongly what is going on today, for example, in West Africa, where the 3 capital markets, the 3 stock exchanges are speaking together just to make sure that they can offer one single platform to the investors that want to invest into the continent. It is fundamental, in our opinion, to focus on that integration, especially on the capital markets. Within EcoBank, you have a securities firm, which is the only securities firm that is present on those 3 stock exchanges. So with close partnership with the stock exchanges, Oscar from Nigeria, Felix from BRVM in Cote d'Ivoire, we clearly want to support that initiative going forward in terms of further integration in the capital market. The second thing that we need to keep in mind as well, which is which is something that is very close to my heart, is indeed another story that is developing in Africa, which is what we call the African saver story. People talk about the African consumer story. We believe that beyond the African consumer story, there is a story which is the African saver story, where you have a middle class which is more and more having revenues and which are now looking for ways to invest those revenues. The latest figure that we have is, if you consider the asset under management today in Middle Africa, it is close to 60 billion US dollar, and our anticipation for 2025, basically in 10 years, is to see that number close to 600 billion US dollars. So this is a massive opportunity for portfolio managers to provide to that mass amount, and that's what you have seen in some other emerging markets, where you can begin to build a solid suite of asset management products to that class and also deliver pension products to them. So we strongly believe into that story as well, and I will encourage investors or pension funds or hedge funds that do not have Africa in their exposure to strongly consider that case. In the past, having Africa in your portfolio was considered as a risk. Today, not having Africa in your portfolio is a risk. So I'm going to stop there and take further questions later on. Thank you.
Great, thank you so much. I think this was quite an informative panel. I hope you agree with me, because we've had cases of specific companies in different sectors, but also institutions that accompany investors in the process of identifying opportunities and putting their capital to work. So with that, I thank you all again, but let's open it up for questions. We have microphones around?
Yes.
Precious? All right. We have in the front over here. Thank you. So you can just tell us your name and affiliation and.
Joanna again from Ashmore. My question is for Mr. Okyowo. You mentioned quite a bit of success in raising capital for various institutions, and one of the points you made was your ability to give them some comfort regarding the fear of devaluation in the currency. Could you share with us what you were able to share with your clients regarding that specific point?
Okay. Thank you very much. The reality is that exchange rate devaluation is something that's not just an issue in Africa, it's across emerging markets. We envisage that, in promoting and supporting investments, we tend to focus on the sort of investment that is longer term rather than a portfolio investment. I mean, there is nothing wrong with portfolio investment, if I may say so, but in essence, it's a play on the market. But what we focus on is real investment, in the sense that you're looking at investors who are ready to participate in a project and are ready to consider the long-term return on that project, regardless of exchange rate fluctuations. And we've seen such investments whose return are essentially shielded from currency devaluation in a whole host of sectors. I've mentioned oil and gas earlier. I mean, basically it's a commodity play. Oil itself is denominated in dollars worldwide. So while it may be subject to price fluctuations, it's not really a devaluation story. In telecoms, for instance, the sort of returns we've seen in telecoms in Nigeria is enough to defray any devaluation. And it was interesting. We did some research work over the last 10 years up to end of last year, and look at the Nigerian currency has been sort of depreciating over that period. But we look at what happens to an investment, just an investment in Nigerian government bond over that period. And it's good that you are from Ashmore. You have a lot of experience in this area. And it turned out that if you net off the effect of currency depreciation, all right, you are still ahead by more than 8% that is better than the return you'll have earned on whether it's US Treasury bills or bonds or whatever over the course of that 10-year period. I mean, that's the reality. And that's investing in essentially a risk-free instrument. You know, so if you're investing in a project that generates a lot more return than that, I mean, I don't need to tell you what the opportunities are there. So my point is that if you work with the right partners, you select the right project, and you back the right sponsors. Africa is a gold mine. I mean, there are very, very good opportunities there that are just as good in terms of return, regardless of what's happening in the currency.
Excellent, thank you. More questions? Yes, sir.
I have been struck by the interest in international investors, among international investors in investing in Africa, but I don't see much product with respect to retail interest in the OECD countries. In the US, for example, there are some funds, but there isn't really a range of opportunities in both fixed income and in retail. So I wonder if you could talk to that issue, whether you're looking at that. Certainly managing African money from Africa, 60 to 600 billion, is a huge opportunity, and you may not really want to look at other sources of funds to manage, but it seems to me investing in local currency in Africa could be exciting for some. Some institutions are doing that, but there isn't much retail product directed through, let's say, some major US and other outfits like Schwab or Van Kampen Merit or whoever. So what are you thinking about this, or are you just so much low-hanging fruit that it doesn't matter?
Sure, thank you. Wants to take this?
Lena, do you want me to take it? Okay. Okay, thank you for your question, which is a very good one. Indeed, what we don't have in Africa today is a range of retail products, as we can see in Asia, for example, where you have a range of retail products that can provide you access to international or to emerging markets. If you look also in North America, indeed, you have also that massive pool of retail products that you can buy if you want to have exposure to emerging markets. The reality is it is a process. It always takes, number one, the institutionals before moving to the retails when looking to buy, when looking to build the fund management industry. We have seen the same process in Latin America. We have seen the same process in Southeast Asia. North America, and especially US, is significantly lagging in terms of exposure to Africa. If you consider the pool of assets available and the exposure of that pool to Africa, if you compared US to Middle East, Europe, and Asia, US is the last one in relative terms. So it is for us as well to engage more and more the institutional investors that are going to lead the way and show the retail side that you need to consider increasing your exposure to Africa. The second point to raise as well to respond to your question is, in Africa, there is also a need from the portfolio managers to develop a real suite of retail products, and I'm talking about from an asset management perspective here. You have some mutual funds across the countries, and especially in Nigeria, Cote d'Ivoire, and Ghana. For example, EcoBank, we have a family of 10 mutual funds that we have developed in those countries and that are dedicated only to retail people and that we are selling through the branch network that we have. We have 1,250 branch network across Africa, so the point and the target is to make sure that we can deliver those retail products to those 10 million customers within the 1,250 branches that we have in Africa. So that's the first point to your question, which is the retail side. There was a second point that you have raised, which is also something that is very close to my heart, which is the issue about investing in local currency assets. Because it always puzzles me when you talk to investors, they're going to tell you that they are ready to invest in Africa, but they only want to consider Eurobonds. Come on, let's be serious. If you look at Eurobonds, the same credit risk that you are taking in investing in Eurobonds is the same that you are taking when investing in local currency bonds. It's the same credit risk. The only thing that you add is the foreign currency risk. That, by the way, you can hedge as well. So it's not a matter of credit risk when you're investing in local currency. So one thing that we are trying to do from a CoBank perspective is to educate investors as well on the opportunity that you can see in the fixed income market, and especially in the local currency bonds market. So we have set up in 2012 what we call the Middle Africa Bond Index, which is going to provide them a benchmark and showing them how the bonds, local currency bonds in Africa are performing. And I can tell you that consistently since 2011, the Middle Africa Bond Index that we have set up has been beaten significantly, the JP Morgan Emerging Market Bond Index, by more than 400 basis points every single year. And I'm talking about local currency versus local currency. So it is an opportunity that investors have to grab, and our job now is to indeed set up a vehicle that is going to be replicating that index. Because I can understand from the investor's perspective, it is also very difficult to say that I want to invest into those local currency, but I want to do it with a disciplined approach. So that's why we believe that having a passive strategy may be a better product that can help them to say that I just want to have an exposure and I'm going to see how the benchmark is going to progress without putting my bets on the quality of the portfolio manager. I just want to have that exposure with it on that product. That would make sense. So that's one of the things that we're going to be launching in the coming months. A family of bond index funds that can be appealing to the institutional investors. Thank you.
Thank you very much. So these would be exchange-traded funds that will be available, mutual funds that will be available for the public, right?
Yes, it is. It's not going to be an ETF, but it's going to be a fund that is going to be domiciled indeed in a jurisdiction that, once again, investors like, because that's another issue as well that we know. People say that I want to play Africa, but I want to make sure that the vehicle is not registered in Africa. Why? We don't know.
To give them comfort, maybe. Yes, Mr.
Just to add a few things. It's interesting when we had a discussion or a panel yesterday or today discussing diaspora funds and diaspora bonds. The challenge with retail investment and retail investors is that every jurisdiction tends to protect them, primarily because they are not regarded as sophisticated investors. All right, and in that sense, I mean, I cannot agree more with my colleague that institutions have to lead the way, but more importantly, it's really very difficult to step out of your country or your territory and market retail products in a different jurisdiction. I mean, you will violate all sorts of laws. We are part of the team working on the diaspora fund for the Nigerian government, and I can assure you we've been on this for close to a year, just trying to navigate our way through the different laws in the different jurisdictions, whether it's Euro, UK, or the US. You know, and it's for very good reasons. I mean, you can imagine the sort of fluctuation we've seen in the currency market. It's tough for institutions to cope with it. You know, retail investors will be at a loss. I mean, they just won't, half of them won't know what to do. You know, so I think there are very good reasons why retail investors, you need to be careful in how you bring them into markets that are emerging markets and ensure that their expectations in terms of return and protection of their capital is met.
Right. Excellent. Thank you. More questions? We have maybe time for a couple more. One more. All right. Yes, ma'am.
Hi, thank you very much. It has been very interesting to learn all about the African countries and companies. I'm here on behalf of the NEPAD agency. I'm a special advisor to Mr. Namayaki, but I have also another hat. I'm senior consultant for African investment for Sumitomo Chemical Company in Japan. So with my hat, the second hat, I have two questions. One is that whenever I try to convince the Japanese companies to invest in Africa, they always say that Africa is far away. And some of them think that Brazil is closer than Africa, which is wrong. I would like to know from the African point of view, do you feel Japan far away? If so, what is it? The secondly, how do you see the Japanese companies in Africa? What do you think they should be doing? And also, if there is somebody who could give me 3 selling points that I should use to convince Japanese companies to come to Africa. So this is one set of questions.
That's a lot of questions.
Okay. Now, I'm giving you a lot of food for thought. Right. The second question is often African compare Japan and China. And I always say that the Chinese are coming so aggressively to Africa. You people, Japan, you are losing the boat, and you really should hurry up. And I'm still having difficulties. Now, I would like to hear from African companies, how do you see the Chinese investors coming to your continent? Do you feel comfortable about it? Do you feel a threat about it? How do you see the difference of Chinese investors and Japanese? These are the 2 set of questions. Sorry, too many questions.
Thank you very much. All right, so who wants to pick which of the questions? Maybe from a standpoint of an African-based company, do you have any comments on what she said?
Well,
okay, I think I'll try. I'll give it a try.
It's on.
Yeah, what I think is important really for Japanese companies is to really take the opportunity. In Africa, there's so much opportunity, and Chinese are coming, like you rightly say. But I think what they're doing, obviously, is also they're using the China Exim Bank to give loans. I mean, concessional loans to companies or governments in Africa, which is quite tempting. So governments take those loans, and then of course they are contractors or the companies who come and they do the work, particularly the railways and the infrastructure projects. There's no reason why Japan should not be able to do that, because Japan also has, and I think they also have Nexim, which I think also covers the political risk aspect of it, while China will use the Sinosure to cover the political risk. And we're also there anyway, to be able to share that risk with them. So I think you can encourage them to come, and I think the equivalent of the Nexim, of the Exim Bank should be able to provide those loans to those governments. I think the governments are quite willing to take that, because I know the competition, a lot of competition with the US Exim, because China comes without any conditions. So I don't know whether Japan will come with conditions.
And I think maybe I will add something very quickly. I mean, that's also what we tell many US investors who are also interested, but they're not sure how to start, where to begin. And what we tell them is, while you're sitting on the sidelines waiting for things to be perfect, others are going in, and that's your loss. So people aren't waiting, whether they're Chinese, whether they're investors from Brazil, from Spain, right? So the more you're sitting on the sidelines waiting, the more you're losing opportunity to actually get returns. So I don't know if anyone had any final...
I think fundamentally there's even a need to understand what I will call where each of the developed or developing economy lies in their cycle of development. The Japanese economy has essentially moved practically away from commodities and basically base industries, to a much higher level of production, sophisticated technologies. And they've moved a lot of the base industries into China and Southeast Asia, And what we see in Africa is essentially the Chinese moving a lot of those same base activities closer to its market in Africa. So they will set up, they will do infrastructure in Africa. They will set up companies that do, they will set up significant operations in mining. Those are a lot of what we see in Africa. And for me, it is very much welcomed. I really don't care where the investment is coming from or who's bringing it. It's all welcomed. In Nigeria, for instance, we actually do see the Japanese, particularly in heavy industries, maybe in the oil and gas sector, either working with indigenous or IOCs. We see them in some, in the technology or the automotive industries, all right? But China, just simply because of its size, the size of the economy, its impact globally, has a lot more impact in Africa. And if I'm to offer something to the Japanese companies, all right, it will be, well, if you're looking for market, Africa is a significant market. If you're looking for growth, all right, African countries and African economies are growing faster than almost anywhere else in the world. I mean, so if what is important to your companies is growth, is future opportunities, then you need to consider Africa, and distance should not be a barrier.
Right. Thank you. Mr. Skumar, you want to add?
I'll just give a quick response. I think there's two areas from a producer that we see opportunities for your country. Firstly, it's obviously in the equity side. We're a gold producer, so if you like the gold play but you do not like the risk with normal underground operating mines, a company like ourselves will be a good opportunity for yourselves, which we don't have the risk, but we're in the gold space. And I think on a second level, it is specifically technology. We've just implemented a new process called the flotation of fine grind circuit, where the beads that's used in the mills grind the material down to 90% passing 22 microns. Now that is essentially face powder, stuff you ladies put on your face, same size, and that is gold ore. Now those beads come from, some of them come from Japan and China in particular. So technology in South Africa, and specifically in our company, is playing a massive role. So there might be two opportunities for yourself.
Wonderful. Well, thank you very much. Please join me in thanking our panel. Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.